This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, August 12, 2026, and this is the New York session. Now, let's get into it. We are deep in the red zone of investor psychology, with the fear and greed index locked at a historic low of 14 out of 100. But look closer at the tape. While the broader market cap ticks up a fraction, Bitcoin futures demand has cratered to levels unseen since early 2024. The disconnect is deafening. Looking ahead to the week's economic calendar, the first item on the radar is Consumer Price Index data, landing on August 12th. This inflation print sets the tone for the entire week. Next up, we have initial jobless claims and Producer Price Index on August 13th, offering a snapshot of labor market tightness and wholesale inflation pressures. Finally, retail sales and business inventories drop on August 14th, providing crucial data on consumer spending power and supply chain dynamics. These figures will determine if the current VIX suppression at 15.46 holds, or if equity volatility begins to creep back in. Apex, how does this macro backdrop intersect with the crypto-specific volatility we're seeing right now?
The macro data is currently secondary to the idiosyncratic crypto shark. The VIX is suppressing at 15.46, meaning traditional equities aren't screaming recession, but the fear and greed index is at 14. That tells me the panic is confined to crypto assets specifically, driven by geopolitical friction and leverage unwinding, not a broad macro collapse. When CPI prints later today, watch if that crypto-specific fear bleeds into equities, or if stocks remain insulated.
Here is the snapshot as of 9:19 ET. Total market cap sits at $2.28 trillion, with 24-hour volume at $54.98 billion. Bitcoin is at $63,963, down 0.5%. Ethereum is at $1,906.09, gaining 0.8%. The broader basket is mixed, with Chainlink leading gains at plus 2%, while Uniswap is under significant pressure at minus 8.9%. Bitcoin dominance is at 56.32%, and Ethereum dominance is at 10.9%. Let's dive into the news driving this divergence. First headline from Cointelegraph: Iranian crypto outflows spike 700% after US-Israeli airstrikes. Second, also from Cointelegraph: Bitcoin futures demand falls to 2024 lows. Are institutions exiting the market? And third, from CoinDesk: U.S. Senate housing bill includes CBDC ban. Pulse, that 700% spike in outflows, how is that impacting the sentiment landscape? It's creating a specific brand of fear centered on capital flight rather than regulatory prohibition. The 700% spike suggests users are rushing to settle cross-border payments urgently, which keeps XRP and Bitcoin active despite the broader extreme fear reading of 14/100. The fear isn't that crypto doesn't work. It's that geopolitical instability is forcing rapid liquidation. However, the 7-day trend rising from 12 to 14 suggests this panic is stabilizing. It's not getting worse fast, but it's definitely heavy. And the second headline: Bitcoin futures demand falling to 2024 lows. That's a structural shift. CIPHER, what are you seeing in the flows?
That is the core mechanical issue. With futures demand at 2024 lows, the market lacks the leveraged buy-side pressure needed to absorb the selling from those Iranian outflows. We are seeing a hollowing out of the mid-range liquidity. Whales aren't accumulating on dips because there's no leverage fuel. They are waiting for spot prices to stabilize. The $54.98 billion volume is mostly spot-driven, which is less efficient than derivative-driven volume. This makes price discovery brittle.
Finally, the Senate housing bill including a CBDC ban. SPECTER, is this narrative holding weight, or is it being overshadowed by the Uniswap crash?
The CBDC ban is providing a floor for Ethereum and Chainlink, but it's doing nothing to stop the bleeding in governance tokens. Uniswap is down 8.9% to $3.55. That is a violent rejection of the decentralized finance governance narrative. The market is voting with its wallet. It wants utility, Chainlink, XRP, and protection, Ethereum, CBDC ban, but it is actively shunning speculative governance models. The VIX at 15.46 shows equities don't care about this yet. But in crypto, this is a major risk flag for any token reliant on protocol voting rights.
Let's start with Bitcoin. It is trading at $63,963, down 0.5% on the day, with a 24-hour range between $63,200 and $64,329. Grid, what is the technical structure telling us at this level?
Bitcoin is currently testing a critical juncture. $63,963 is acting as a temporary anchor, but the geometry is ugly. We are seeing lower highs forming on shorter time frames. The key issue here isn't just price, it's the open interest. With futures demand at 2024 lows, there is very little leverage defending this level. If we lose $63,200, which was the 24-hour low, we open the door to a wider gap down because there are no leveraged longs sitting just below to get stopped out. The chart is thin.
CIPHER, does the on-chain data support this thin thesis?
It absolutely does. Look at the inflow/outflow dynamics. The 700% spike in Iranian outflows is pulling liquidity out of exchange reserves and into private cold storage or cross-border settlement rails. This reduces the available supply on centralized exchanges for spot buys. Meanwhile, the collapse in futures demand means there is no leverage long layer to catch falling knives. We are essentially watching spot traders fight against a gravity well created by missing derivative depth.
Pulse, does this lack of leverage affect how you're reading the sentiment beyond the raw fear and greed score? Yes, it changes the nature of the extreme fear. Usually when F&G hits 14, we see capitulation spikes, massive red candles followed by relief rallies. Here, the rallies are weak because there's no short covering to fuel them. The 7-day trend rising from 12 to 14 indicates that the panic is subsiding, but the confidence hasn't returned. Traders are scared to enter positions because they know the order book is shallow. It's a wait-and-see fear, not a sell-everything fear. SPECTER, is there a risk scenario you're monitoring here, given the geopolitical shockwaves?
The risk is a liquidity vacuum event. If the Iranian situation escalates, or if the U.S.-Israeli airstrikes lead to broader regional sanctions enforcement, the speed of outflows could exceed the capacity of spot markets to handle. With VIX low, equities won't provide a hedge. We could see a flash crash in Bitcoin simply because there are no buyers at $63,000. The structure is fragile. The fact that Bitcoin is down only 0.5% while sentiment is at 14 suggests passive holding, not active buying. Passive holders can turn into sellers quickly if the narrative shifts.
Shifting to Ethereum. It is at $1,906.09, up 0.8%, outperforming Bitcoin. The 24-hour high is $1,918.99, and low is $1,854.88. Grid, why is Ethereum showing relative strength here?
This is a classic flight to quality within the crypto asset class. Technically, Ethereum is holding its structure better because the narrative surrounding the CBDC ban is providing a fundamental floor. From a chart perspective, Ethereum is refusing to break key support levels that Bitcoin is flirting with. The spread between Ethereum/Bitcoin is widening, which historically happens when regulatory clarity becomes a premium factor. Ethereum is treating $1,906.09 as a pivot point for this policy-driven rally.
CIPHER, are we seeing actual flow shifts into Ethereum related to this narrative?
The CBDC ban news is driving institutional interest in permissionless ledgers. We are seeing increased activity in Ethereum-related staking and L2 bridging. More importantly, the tokenization narrative, highlighted by TD Securities noting NYSE tokenization as an institutional turning point, is funneling capital toward infrastructure that supports Ethereum and similar programmable chains. The money isn't just sitting in Ethereum. It's moving into the ecosystems that benefit from regulatory protection against CBDC.
Pulse, does the market agree with this policy-driven strength?
The sentiment data supports it. While overall F and G is at 14, the submetrics for regulatory clarity are stabilizing. Investors are using Ethereum as a proxy for safe crypto assets. The fear is concentrated in assets with unclear legal status or high speculation. Ethereum is being treated as a bond-like alternative in this specific window. The 0.8% gain is small, but it's consistent, whereas Bitcoin is choppy. That consistency builds trust in sentiment.
SPECTER, is this strength durable, or is it a trap given the broader market weakness?
It's fragile because it's dependent on news flow, not just mechanics. If the CBDC ban narrative loses steam or faces political hurdles, the premium Ethereum is carrying could evaporate. Also, remember that Bitcoin is dragging the market down. If Bitcoin breaks $63,000 decisively, Ethereum will likely follow due to beta correlation, regardless of the CBDC news. The $1,906.09 level is strong now, but it's propped up by a narrative, not necessarily by massive volume expansion. Watch for volume divergence. If price goes up but volume drops, the trade is over.
Let's address the elephant in the room, Uniswap. Uniswap is at $3.55, down a staggering 8.9% in 24 hours. The high was $3.86 and low $3.47. Grid, this is a technical breakdown. What's happening?
This is a breakdown of the decentralized finance governance meta. Uniswap has broken through several support levels, and the volume profile shows heavy distribution. There is no bounce. Typically, you'd expect a retracement to test $3.86, but the selling pressure is relentless. This suggests algorithmic or large block selling rather than organic retail profit-taking. Technically, this looks like a trend reversal, not a dip. The chart is heading towards unknown territory, as previous support zones were formed during different market cycles.
CIPHER, is this a protocol-specific issue, or part of a broader decentralized finance exodus?
It's protocol-specific, but symptomatic of a broader shift. Look at the comparison with Chainlink. Chainlink is up 2% at $8.81. Why? Because TD Securities is pushing tokenization and institutional adoption, which benefits Chainlink's Oracle infrastructure. Uniswap, however, is facing headwinds from regulatory scrutiny on swap fees and governance centralization concerns. The flows are leaving generic decentralized exchange governance tokens and moving toward infrastructure plays that serve traditional finance. The $54.98 billion volume is avoiding Uniswap like the plague.
Pulse, how is the community reacting to this double-digit drop?
It's toxic. The sentiment around Uniswap is shifting from frustration to abandonment. In the 7-day trend, Uniswap's social volume is spiking with negative keywords. Unlike Bitcoin, where fear is uniform, Uniswap has a targeted hate campaign from both retail and institutions. The 8.9% drop is a vote of no confidence. People are worried that governance tokens have no intrinsic value proposition in a world where regulations tighten. The community is fragmented, and leadership is struggling to counter the narrative.
SPECTER, is this a buying opportunity for contrarians or a falling knife?
It is a falling knife. Do not try to catch this. An 8.9% drop in a single day is not a discount. It's a repricing of risk. The fundamental thesis for Uniswap is being challenged by the very regulatory trends that are helping Ethereum. If the SEC or international bodies decide to target decentralized exchange governance, Uniswap is on the front lines. Combined with the low futures demand in the broader market, there is no leverage to fuel a rebound. I'm watching for a potential 10–15% further drawdown if it fails to hold $3.47. Stay away.
Turning to XRP, it is at $1.02, up 0.9%. High $1.02, low $0.99. CIPHER, you mentioned earlier that the Iranian outflows are hitting XRP hard. Walk us through that flow dynamic.
Correct. The 700% spike in Iranian outflows requires a settlement rail that is fast, borderless, and resistant to censorship. XRP fits that description operationally. We are seeing on-chain volume surges in XRP transfers correlating directly with news updates on the geopolitical situation. This isn't speculative buying, it's functional usage. Money is moving through XRP to escape or settle transactions in a volatile region. This provides genuine, albeit chaotic, volume support.
Grid, how does this functional volume translate to the chart?
It's keeping XRP above $1, which is a key psychological barrier. Despite the broader market weakness, XRP is holding its ground. The 0.9% gain is modest, but it's positive in a sea of red or flat. Technically, XRP is forming a base around $1. If it breaks above $1.02, we might see a short squeeze. But the volatility is asymmetric. It can spike up on news. But it tends to bleed slowly if the news cycle cools off. The chart is cautious.
Pulse, is the sentiment behind XRP healthy?
It's utilitarian, not euphoric. Traders aren't pumping XRP because they think it will go to $10 tomorrow. They are holding it because it works. The sentiment is pragmatic. It's not contributing to the extreme fear narrative because it's viewed as a tool, not a gamble. That makes it a safe harbor in this specific crisis, though perhaps not a leader in a bull market.
Apex, let's tie this together. We have Bitcoin at $63,963 facing thin liquidity, Ethereum at $1,906.09 riding a policy wave, and Uniswap at $3.55 collapsing under regulatory fear. How should listeners position themselves for the rest of the day?
The picture is clear: bifurcation. The safe narrative is winning and the speculative narrative is losing. As I noted earlier, Grid flagged the technical weakness in Bitcoin's $63,000 level, but CIPHER confirmed that the lack of futures depth makes that level precarious. Meanwhile, Pulse pointed out that sentiment is stabilizing at 14, but only because the panic has shifted from crypto is dead to specific sectors are unsafe. SPECTER rightly warned that Uniswap's 8.9% crash is a structural break, not a temporary dip. My assessment: rotate away from governance tokens like Uniswap and high-beta alts. Hold or accumulate policy-backed utilities like Ethereum and Chainlink. Be extremely cautious with Bitcoin exposure until futures demand recovers from 2024 lows. The market is rewarding utility and punishing speculation.
To wrap up today's analysis, first, Bitcoin is at $63,963, but the real story is the collapse in futures demand to 2024 lows, making price action brittle. Second, Ethereum at $1,906.09 is outperforming due to the CBDC ban narrative, offering a rare bright spot in a sea of fear. Third, Uniswap's 8.9% crash at $3.55 signals a definitive rejection of speculative decentralized finance governance. Keep your eyes on the CPI data at 10:30 a.m. ET today and monitor whether the VIX remains suppressed at 15.46 or begins to climb. Thank you for listening to ShadowQuant Crypto Edition. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.